GST has been one of the much awaited reforms with the potential to add few percentage points to our GDP. That's the view that we have from IDFC Securities. We have Anish Damania, CEO, now joining us from there. Anish, good afternoon. So, you know, uh, first of all, how would you play this theme? Because a lot of this may have already played out. On FMCG in particular, incrementally from here, how would you approach it?
So I think GST has been talked about for quite some time, and one of the things which people talk about is the shift from the unorganized sector to the organized sector. And fortunately for us, all the companies which are listed belong to the organized sector space. So obviously, even if, let's say, you consider a scenario where economy is not growing too much, even then the companies which are listed probably will have a much better growth rate than the rest of the economy. So that is the premise. Now we are going into a different premise, saying that look, oil prices have stayed low for quite a while, interest rates have been low for quite a while, inflation has been low quite a while. So we are starting to see the impact of that coming through in the economy, and economy is probably on a growth path. Apart from that, also we have seen the impact of demonetization, which would actually mean that there could be more revenues coming to the government by way of a higher compliance. So putting all these things together, you probably are going to see a significantly higher spending from the government, led by buoyancy of taxation. The government is also planning a divestment, and we are seeing a flurry of those probably coming through over the next few months. So all of that put together would mean that spending probably from the government side could increase into the economy, and which was fairly necessary. Now, given these aspects, probably we will see a much faster growth rate for the companies which are there in the listed space. In terms of earnings, we have already seen that this earnings season, probably the companies have beat the expectations by about 6 to 7 odd %, which is a significant beat coming probably after a gap of 3 to 4 years. All said and done, given this, and plus what's going to come about, we continue to remain positive on the market. While our target right now is about 9850, we will watch the earnings momentum going forward and see how the GST actually gets implemented and take a call from that on.
So, Anish, hi, good afternoon. Surabhi here. Is there a GST trade still left? Whether you're looking at something like an ITC, cigarette stocks, or, tile maker, ceramic tile plays, or is most of that already over? And also, we keep hearing a lot about this destocking as dealers gear up for the transition. Is that going to be earnings disruptive in the next quarter?
That could be a probability that, in the run-up to the GST, because there is no provision there as to how to treat in this transition phase, what do you do with the stocks, and that could mean that there could be some destocking, and that could disrupt some earnings. But given the fact that we probably are going to see a better trend in the growth trajectory, I would say that most of the people would be factoring this as a one-off event and move forward. Secondly, you asked me whether the GST theme has played itself out. I think to a large extent that theme has played itself out, because over the last 1.5 years, we have seen all the stocks related to GST have moved up significantly, both in terms of appreciation as well as in terms of multiples. So to a great extent, that has got played out. But what I am betting on probably is that the growth which is going to expected to come back into the economy will mean that earnings momentum for some of these stocks could remain strong.
Okay.
And that could mean that these stocks could continue to do well.
Okay, let's talk about some stocks then, Anish. A couple of them really stand out for me. One is Dish TV, and the other is Aurobindo Pharma. We have seen quite a bit of price damage in both of these stocks. What's the call you're taking on both these names?
Yes. Yeah, so Dish TV, the reason why we would like to play on Dish TV is the fact that they're going to merge into an entity wherein they are going to take on an equally strong player into their balance sheet. And we feel that given the size which they will go into, there will be a lot more operational efficiencies which could come through. There could be lot more cost savings which could come through, and therefore, and when you go with the size, clearly the market dynamics change for you. So we are betting on that, and given that, we expect that over the next 1 year, as this plays itself out, Dish TV would get reflected in Dish TV's stock price as well. The current fall in Dish TV was an immediate impact of the earnings which went by in this quarter, where you saw ARPU fall by about 11 odd %, where most analysts, including us, were expecting ARPU to grow a little bit. So that was a surprise, and I think that surprise has caused some distortion in the stock price right now. We think that this is an excellent opportunity to get into the stock once again. There's a second stock which you asked.
Aurobindo Pharma.
What was that?
Aurobindo Pharma.
Aurobindo Pharma. So Aurobindo Pharma, yeah. So Aurobindo Pharma, yeah. What we have seen is that the entire pharma pack, wherever the US sales are dominant, that pack has really taken a big beating, because over the last 2 quarters we have seen price erosions come through, and in this quarter it was more severe, and as a result of that there have been earnings downgrades. Secondly, we have seen increased activity from US FDA in terms of inspection of plants, and therefore the respite which one expected to come through has not come through. But what we feel is that the kind of price erosion which we have seen so far is probably ebbing or will ebb over the next 1 quarter. And the fact that US FDA inspections are happening now more frequently would mean that the plants actually the plants would now become more compliant with them as we move forward. So we are seeing probably the trough of all the bad news for the pharma sector, and now that the valuations have collapsed along with the stock prices, we feel that this is a very good opportunity to go into those stocks.
Okay, interesting take there. Mr. Dulcian, I want to bring you in on this. That's a question I had on my mind as well, because, you know, there is some kind of a bargain hunting that's going on, if you can call it that, on a Cipla today. Even on some of the smaller names like a Wockhardt, for instance, on a Divi's, which is up 6%. Is this the right time to be bargain hunting in pharma? Would you buy anything?
See, if you have any specific news in respect to each company, then only you should go for the pharma stocks. Because take the case of Wockhardt, you know, again, I'm not trying to say that this is the news. These are just the rumors going on that probably company will be having some kind of news coming in for their Shendra facility from US FDA. And I don't know how far that has to be believed, because we must have received this US FDA for their many of the plants, you know, whether you talk of Waluj or you talk of this Shendra in this last 6 months so many times. So it's difficult to take a call, number one. Number two, you do see sometimes, you know, these kind of value buying scene coming in after having taken such a beating, which we have seen today in DBS lab also. But on a broader scale, because looking to the situation prevailing on the US FDA front and even on the domestic front, you know, the kind of curbing of the branded drugs and all that, I won't be courageous to take a call on these larger pharma stocks, though, you know, one can look to buy the smaller pharma stocks, you know, which are either in the small cap or in the mid cap category.
Anish, another pick that I think you have that really caught my eye as well. Infosys, is that right? What makes you like the stock right now with all the news around it and the noise around it?
Yes. So what we had seen is that you know, tech companies had taken a beating over the last 2 quarters in terms of what they guided and what came by. But what we are seeing is that the US economy is strengthening. If you closely watch, most of the companies out there are beating estimates, and we have seen this scenario pan itself out in the past as well, when the S&P 500 companies start beating the forecast of the analysts. We start seeing momentum into the IT stocks, and this is probably what we would expect would happen. So as the US economy strengthens, notwithstanding that we have seen an appreciation of the rupee, we feel that the IT companies now will start doing well on the volume front, and that is what was missing so far in this link. And we feel that at the valuation which they have come up to now, they offer very good opportunities to buy into these stocks.
Okay, Anish, thanks a lot for your time today. That's the view from IDFC Securities. Info, its numbers flashing on the screen. Revenue up 8%, EBITDA up 30%.